You talk about potentially avoiding a hard landing in Beijing, but the Chinese economy is surely slowing down. The latest headlines right now of South Korea's 20-day export numbers. Exports to China falling 11.2% year on year. Are you at all concerned about the latest economic data, whether it's from within the country or from neighboring countries signaling of a slowdown? And does Beijing have the means necessary to really offset this?
Sure. I'm not surprised that the Korean export numbers were weak because China's imports numbers last month were quite weak, and that was due to some of the COVID-related measures and also the property market slowdown. And I think that Chinese markets certainly reflect the economic headwinds that the country is facing. And I think that Korean and perhaps Taiwanese equities also reflect some of this slowdown as well. And I think that China's amplified economic headwinds right now could have wider range and impacts around the region.
I'm still a little bit surprised at the number. South Korea, first 20 days, chip exports falling 7.5% year on year. Already, the market was so pressured in the past few weeks, really concerned about those tech exports from South Korea. And of course, Taiwan also very heavily dependent on this sector. So how does this set us up when it comes to Northeast Asian trading?
Sure. Well, if we even look at like inventory levels in the U.S., inventory levels are back to normalized levels, and so I think that part of this is part of the business cycle that we're seeing now. When I think about North Asia, South Asia, when it comes to markets, I think North Asia will continue to see a bit of soft patch given that global growth is slowing. But if I look at Southeast Asia, South Asia, I think that there continues to be a bit of legs, especially as those economies reopen, and places like Thailand, Malaysia, and Indonesia should benefit from the wintertime peak tourist season.
David, when you take a look at the broader, longer-term growth outlook for China, it does seem like we're in for this new normal of slower structural growth, right? Where do you see the opportunities of the sectors, the types of companies that could do well even in that environment?
Sure. I think that that sectors that receive policy support, especially in green energy, alternative energy like wind and solar, electric vehicles, electric vehicle batteries, high-tech manufacturing, these sectors will continue to do well.
We are also seeing the Korean won trading at the weakest since 2009. It's a fresh high for the dollar won pairing, and we're seeing the won falling just about 0.8% against the dollar. So now extending that loss for a fourth day, obviously on the back of those trade numbers. How do you see the currency headwinds playing out, either favorably or unfavorably in this region?
Well, I think that that there continues to be a bit of economic headwinds for the Korean market, the Korean economy. I think a lot of it will depend on how quickly the Chinese market and economic model starts to see a bit of a base there and to start to see kind of a rebound. I think that will certainly impact the Korean economy and also the Korean won. Also to see if we'll see additional fiscal stimulus measures coming out from the Korean government.
How closely are you watching what's happening at Jackson Hole this week? What do you want to hear, and how do we hedge in Asia? I mean, it will be a volatile week, won't it?
Sure. Well, I'll be watching very closely what Fed Chair Jay Powell will be saying, and I think the expectation is that he may pivot to be a little more dovish, but I'm not so sure. I think that the message that he wants to send is that that inflation remains too high in the U.S. and that the Fed continues to want to focus on bringing inflation down, which means that the Fed will continue to tighten liquidity and hike rates.
When it comes to financial conditions, we really have seen them really ease again, and that's not necessarily what the Fed wants to see, right? So if we get any commentary around how much more needs to be done, what will it really mean for risk assets?
Well, I think that the crux will be dependent on the trajectory of the Fed tightening path. And I think right now, the conversation narrative has moved from, a 75 or 100 basis point hike to, say, a 50 to 75 basis point hike in the September meeting. And I think that markets will interpret that and try to suss out what is the pathway going forward. I'm in the camp that I think that it's more in the 50 to 75 basis point hike, and that equities can do well in this environment.